FX and rates in focus, but also the macro theme, I suppose, being set by some of these tech earnings. We've had a little on Tesla this morning. In terms of Alphabet, we're waiting and seeing there as well. Does this sound like something? I see NASDAQ futures are down. It sounds like something that's going to weigh on sentiment, the tech story so far.
Yeah, no, I mean, I think that's going to be the big question, right, is what actually drives the S&P 500 going forward. I mean, we saw tech stocks taking an absolute beating last week, and really people are looking to earnings to kind of sort of change that around, give tech stocks, but also the S&P 500 really something to drive it going forward. I was really struck by an MLive Pulse survey that we had on Sunday that basically said that people are expecting to see earnings driving the S&P 500. I think that there was a sort of two-thirds majority of respondents that expected earnings to provide a boost. But, you know, when we do see results like Tesla's results, like Alphabet's results coming back, you've got to wonder exactly which results are going to be the ones that act as that kind of boost for the S&P 500. So I think it's going to be interesting to see whether we do get kind of broad-based earnings strength coming through from some of, not the smaller names per se, but the more diversified names. We do have Ford reporting today. We have Chipotle reporting today. So I think just kind of beyond these big tech names, do we start to see kind of a more positive earnings story growing? Because that would be something that could potentially help with this broadening of exactly what is driving stocks this year.
I can draw a line between the tech story and the risk-off kind of narrative into the dollar, but then I look at the yen, and the yen's stronger, and I'm kind of wondering why.
Yeah, the yen is my favourite story at the moment, for obvious reasons. It's been very, very interesting this year just watching it weaken and seeing kind of officials jumping in to try and intervene and support. But as you point out, the last couple of weeks have really seen a turnaround. And there's a few kind of competing theories about what exactly is going on here. The one I would point to as most convincing is that we've seen short positions really build up in the yen over the past sort of few months. You know, everyone betting that weakness is only going to continue, that intervention is going to be fruitless. I think some of those are now starting to get unwound. And the reason I think that those are being unwound is not necessarily because everyone sees hugely great things for Japan's economy, but I think two things are influencing people's feelings about this. Number one, we have the Bank of Japan meeting next week. They might actually hike again. Hooray. We've all been waiting for it. We saw the first move in March. There's been a sense that they were going to move rates higher much more aggressively than they actually did this year. So if we do see that, that would be a reason for the yen to strengthen. More interestingly, though, I think, is that the intervention jawboning has kind of changed strategy in recent weeks. When we saw them intervene earlier this month, they did so actually when the yen was strengthening. It was kind of bouncing around US data, and they jumped in to drive it further. That was a really interesting change in tone, and it suggests, I think, to some traders that maybe they couldn't be complacent if they were seeing kind of yen strength, that they had to always be alert for intervention. That, plus the fact that they did a rate check on euro yen, suggested again that maybe they were thinking about broader intervention, and I think that got people a little bit cautious, and maybe they're now thinking, we'll take a little bit of money out of this and see where we get to with the Bank of Japan meeting.